All right, so welcome to chapter 3. All right, so now we're going to look at the speed and sniper framework. So this is just something I came up with to sort of help me to better understand my psychology, but also I'm going to be sharing with you. And then after this, I'm going to be sharing with you the $1,000,000 framework. You can't miss that. All right, so let's quickly go through the speed and sniper framework. Now, the journey ahead, winners never quit, quitters never win. And I believe that's why you're here. So a lot of people would have called this quit after, failing multiple times. But for you, you felt the need to take the psychology and performance course. And that's why I know they're going to succeed long term. Yes. All right. So let's look at the speed and sniper framework. Now, the speed and sniper framework, essentially, like I said, is a concept I came up with to literally just help me wrap my head around my psychology every now and then. Now, looking at the speed framework, S stands for strategy. So first, you must have a strategy. If you don't have a working strategy, then you're actually in the wrong place. You should have a working strategy that you've implemented in the market, and as a result of that, you're failing with that strategy, and that's why you're taking the performance or the psychology course. So you need a strategy, right? So the first component of the speed framework is strategy. To be successful, you must have a clear understanding of markets and a well-defined trading plan. Here are some strategies for developing your trading strategy. Okay, so understanding. Develop a deep understanding of the market, your trading, including the fundamentals, technicals, and any other factors that may affect the performance. Okay, so you need to have the understanding. If you've taken the basic and mastery course, you already have a strategy. However, for those of you who are taking this course without that, I hope you do have a strategy as we go through this. Now, you must also have a plan. So you develop a well-defined trading plan that outlines your goals, your risk tolerance, and entry and exit points for each trade. This is really interesting because if you don't understand your risk tolerance, you're going to have issues. If, for example, risking $10,000 is too much for you, then you shouldn't be risking it. Okay? If risking $1,000 is too much for you, you shouldn't be risking that amount of money. If risking $50 is too much for you, then go for something lower. You must understand your risk tolerance. It's very important for your long-term success. Now, testing. Of course, you must test your trading plan through back testing and simulation to ensure its effectiveness, and also through forward testing in the market. Okay, in the live market, you predict the market and you test it if it works through forward testing. Because sometimes back testing can sort of deceive you, and you think, oh, I have a very good working strategy, but then you realize later that I'm not performing well in a live market. Okay, the next letter there is P, psychology. So your psychology must be such that it's robust, you have a strong mindset, and you're able to administer or to manage your emotions. This is very important. And that's why psychology, it's very important. Now, some of the strategies for developing your trading psychology. Number one, your mindset. Develop a mindset that is focused on process over outcomes. Process over outcomes. Not, oh, I made this amount of money, I made that amount of money, which is great. But if you did not follow a process as defining your strategy to make that amount of money, you're simply doing it wrong, because in the long term, that's going to affect you. It's going to bite you so bad. So avoid being overly attached to individual traits and focus on executing your plan. Did I follow my plan, and what was the outcome? That's the most important thing. Now, emotional management. You must also develop the ability to manage your emotions and then avoiding letting them influence your trading decisions. No revenge trading, no chasing price, no impatience. All of those emotional things are things that you need to understand. Now, you must learn to recognize and address any cognitive biases that can affect your trading decision or decision making. Now, resilience. Develop resilience and the ability to bounce back from losses and setbacks. Learn to view losses as opportunities for learning and improvement. This is very critical. Okay. Now, let's look at the next letter, which is E. So execution. Now, when you look at the speed framework, you have strategy, you have psychology, and then you have execution. A lot of traders have challenge, executing your trades, even if they get, the analysis right. Okay. Now, to be a successful trader, you must be able to implement your trading plan effectively. Are you able to implement what you have written down? If you're not able to implement that, that means you're simply not executing it properly. Now, how can you improve your execution? Number one, consistency. Develop a consistent approach to executing your trades. What are your routines? What do you need to do? What do you need to check? And write those down. If you haven't done them, if you do them, check. If you do those things, check those things. If you haven't done those things, then you sort of, fix that. That would help you to really, really, really be consistent in the market. Now, your timing, develop a good sense of timing and ability to enter or exit trades at the right time. Okay. So, for example, there are times where you get volatility, London session open, New York session open, the close also of London, New York and all of that. During news, you have to understand those dynamics for you to execute properly. Now, risk management. You must develop a very strong risk management. Preservation of capital is very important. If you don't preserve capital, you can't last in the market. There is no two way about it. If you don't know how to preserve your capital, you're just going to take unnecessary trades that you shouldn't take. You heap losses upon losses upon losses, and before you know, you blow your account. So you have to understand risk management. All right. So let's look at the last E that we have, and that is experience. Now, experience will come from actually engaging the market, trading the market. You must continuously learn from your experience and strive to improve your skills. So these are some strategies that can help you with your trading experience. Number one, reflection. Reflect on your trading experiences and learn from your successes and your failures. Everybody fails. Everybody succeeds. Who stays longer in the market eventually? But you must, as an individual, be able to sit back and learn, okay? From your journal, from Chartomics. If Chartomics is already out at this time, from Chartomics, study those charts. Okay, what are my behaviors? What pairs, are not helping me? What do I need to cut off? What do I need to remove? You have to reflect, okay? And then continuous learning. You must commit to continuous learning. That's why I want to say very big congratulations to you for taking this particular course. I want to say very big congrats because this is going to change your life, literally. So commit to continuous, learning, okay? Now, that said, adaptability. You must also learn to adapt, okay, to changing market conditions. The market can always change. It can change from bullish to bearish. You must be able to adapt, and that comes with experience. So you're not just fixated, this is my bias, that's my bias, and then every confluence is showing you that the market is reversing, but you're stuck on your bias. So you must be flexible that way. Now let's look at the D. The letter D is discipline. You must be disciplined, right? So discipline, essentially, it's very critical and helps you to be sort of grounded. Without discipline, you can't execute your plan. Without discipline, you can't follow your strategy. Without discipline, you will revenge trade. Without discipline, you do so many things that will affect you as a trader. So discipline is super important. Now, how can you develop and also help yourself to become more disciplined? Number one, focus. You develop a laser-like focus on your goals and stay committed to your trading plan. Okay? What are your goals? You have to be able to develop a laser focus on your goals and then stick to them. This is very important. Okay? Stick to your trading plan. Focus on your trading plan. Forget about all the noise on social media, what people are saying, what people are not saying. You must stick to your trading plan. Avoid distractions and stay disciplined in your approach. Another thing you can do is patience. Learn to be patient. Develop the patience to wait for the right opportunities to present themselves. If you're not patient, you're going to get beaten blue-black every now and then. So be patient. Wait for the market, to give you something. When the market gives you what it wants to give you, all the setups, everything, all the boxes are checked, according to your plan, then execute. But if you're not waiting for all of those things, your confluences based on your trading plan, and you're just executing outside of your trading plan, that's a lot of impatience, and that's going to affect you in the long term. And then accountability. Hold yourself accountable. If you can, trade with a friend. If you can also, of course, join Paruto Capital. The mastermind. The mastermind is a group, by the way, where I meet with traders every now and then. We discuss, we analyze the market, London session, New York session, as at the time of recording this video. So if you're not part of the mastermind, join the mastermind. You need like-minded traders that can hold you accountable. Okay? Now, the sniper framework is the second framework. Now, skill, that's S. You must have the requisite skill to trade. If you don't have the skill, then you should acquire the skill. Go take the Trading Basics and Mastery course. Those will help you, to have the right skill. Excuse me. So those will help you, or the course will help you to have, the right skill. The next thing is knowledge. You need knowledge. This is how you can develop skill, right? You need knowledge. So take the right courses I recommend, of course, the stock and profit trading course because that's what I trade. That's my strategy. So take the right courses. Also, sometimes build your mind. You know, you can read motivational books. You can read books on money and all of that. I believe you'll be able to find all of those resources also in the trading community. On Discord. You see the resources section where you can find relevant books, you know, you can read or trading related books that would help you. So understand, build your knowledge around the market. Then also develop your wit, your critical thinking and problem solving skills. Learn to analyze data, identify patterns, and make informed decisions. Then also build your confidence. Okay. Now, when you have confidence, your confidence really only comes if you have a really working strategy and you've tested the strategy and you know it works and you can actually implement it in the market. That's when confidence comes. Okay. So you have to be able to build your confidence. Start small and gradually increase your position sizes. I'm going to show you how this one works practically. All right. So the next letter is nimble. You have to be nimble. This is the state of being flexible, right? You're nimble with the market. If the market is trending bullish, you're not stuck on, oh, the market must go bearish before I trade. No, you're nimble, flow with the market. Now, how can you utilize some strategies, you know, to become more fluid, nimble, and also dynamic and flexible? Number one is fluidity. Stay current with the market. You have the news. Check the calendar. Don't just go into trading without you checking the calendar for the day. Know what is likely going to come out and then plan your day around that. Then be flexible. Okay. So this doesn't mean that you change your strategy all the time. If you have the strategy that's working, it's not the strategy that is the problem. Most of the time, it's usually you that's the problem. So you stay flexible with how you implement your strategy, not strategy hopping from one strategy to another strategy and then to another strategy. That's not what I'm saying here. Okay. Then dynamism. Okay. Be proactive in identifying and capitalizing on new opportunities. Stay agile and open to new possibilities. Now let's look at the I. The I simply is intentional. You have to be intentional about your growth. How do you do that? Number one, passion. Identify the things that motivate you to trade. You need a very strong why. Why are you even trading in the first place? If you don't have a strong why, then you can't last. You know, so you need a very strong why. You want to make money? That is great. You love the market? That is great. You want to help your loved ones? That is great. You need passion to stay in the game. Now, you also need commitment, and that's being intentional. If you're not committed, you cannot be intentional. You have to be committed to growth. You have to be committed to showing up every morning, you know, trading the market every morning, analyze price action every afternoon during New York session. You know, if you live in sub-Saharan Africa, for example, so you trade, you analyze during Asia session, you have to be committed. And then determination. You must have a very strong determination. So develop a never give up attitude. Learn to bounce back, even when you take losses. Every trader you see that's successful today was once a loser. Okay, literally losing back to back in the market, but they stayed long term, and that's why they have the results that they have. So if you also stay committed, you see to it that eventually you're going to crack the code and trading is going to become easy for you. And by the end of this course, I tell you, you're going to have a tool in your hand that would help you to achieve that. Now, the next letter is P, be patient. I've mentioned this before, but here are some strategies that can help you. Foresight. Have foresight. The tool I'm going to give you in the blueprint is going to help you with that, because if you can see what you can achieve, then you can sit and say, okay, I don't need to over leverage. I don't need to be too aggressive. I don't need to chase price. I don't need to do anything that's outside my plan. I'll just stick to my plan. Okay. So you need foresight. Think of the big picture. Then you also need insight. So you develop a deep understanding of market dynamics. So foresight is you being able to see your future. Insight is you being able to see the current dynamics of what would take you into what you're foreseeing. Okay. Now you need to learn and recognize your patterns, your trends, and of course use the right trading strategy. I recommend the stock and profit trading strategy, and then you would go far. Then temperance. You also need to be able to control your emotions, right? This is part of being patient. You have to be able to control your emotions. When you take a loss, what do? Do you jump back into the trade, or you wait for the next trade that matches your trade setup? That is temperance. Okay, so avoid impulsive decisions and maintain a disciplined approach to trading. The next letter we have is E, emotional stability. Okay, you're emotionally stable. This is very important because you have to be mature, you need depth, and you also need weight to be emotionally stable. Okay, now how do you develop emotional stability? Number one is maturity. Develop a mature mindset towards trading. Don't let your emotions control your decisions. Okay, and learn to take responsibility for your actions. That's mature. When you're able to take responsibility, you see some traders say they take a loss and the first thing that comes to mind is, oh, my broker was, trailing my stop loss. What do you mean by that? That's not somebody who is mature and is ready to really face the task of trading the financial market. Your broker, well, that's some fantasy, but if you have a working strategy, you're going to win all the time. Your broker, out of the thousands of probably individuals trading on the broker, they won't just focus on you, to say, oh, they want to make you feel and all of that. After all, you likely will see your performance on the chart. So where do you place your stop loss? Where's your entry? Where's your take profit? You see all those things, right? So maturity and also depth. You need depth to be emotionally stable. So develop a deep understanding of yourself and your motivations. If you don't understand your strong why, then you can't really last in the market. So you need to understand yourself and your motivations. Then develop a strong sense of personal values and ethics. Stay true to your principles and avoid making mistakes or decisions that compromise your integrity. You need weight. Okay, so stay true to your integrity. All right. Now, the last letter we have is responsible. Okay, so responsible simply means taking ownership of your trading. And here is strategies that can help you to develop responsibility. Number one, ownership. Own everything. You take a loss, I did it. You got to win, I did it. No, it was this guy told me to sell, told me to buy. That's somebody who is not willing to take responsibility. So you take responsibility and focus on learning from them. Now, accountability, hold yourself accountable for your trading performance, not somebody else. Even if you're in the mastermind, and then maybe I share my trades, or maybe some of the mastermind members share the trades, and if it ends up a loss, you don't say, it's worse, this person has shared it, and because of that, I took a loss. No, take responsibility, be accountable, okay, to yourself. And then commitment to growth. You must commit to growth. Join pairs, individuals who are similar, thinking, and are willing to sort of change your financial life, trade together. The mastermind is a very good place for you to find that. So you can join the mastermind. I believe you'll see the description somewhere. Just go to parutocapital.com and you'll be able to join the mastermind. So if you do this, you commit to growth. I tell you that you avoid a lot of mistakes and you begin to see results in no time. So that brings us to the end. But then what is next? What is next is the $1 Million Psychology Blueprint. I can't wait to share this one with you. This is going to be a life changer, literally. So see you in the next video. Cheers and bye.